So as we look forward to 2020, this year we're introducing 5 themes as opposed to 4 last year. The first is the U.S. economy continues to grow, and that recession is very unlikely in 2020. Number 2, the presidential elections are obviously a big topic this year, getting a lot of attention. And we're going to look at some of the data that shows that in the year of a presidential election, especially a first-term incumbent election, the market tends to do very well, and those tend to be strong years. Fixed income. We think this is going to be a tough year, and this is a place to be defensive. We had an extraordinary year last year, very good returns. This is a place to be careful, and we are a little bit concerned in the fixed income markets. In terms of global equities, we're looking at the market going from recovery to rotation, meaning last year in 2019, there was a recovery from a very problematic end of 18. The markets have risen, and now I think the markets start to look at where valuation lies and where opportunities exist. So we expect to see rotation out of the traditional favorites into a more diversified equity portfolio. And then finally, our fifth is that alternatives should look attractive this year. We think there's going to be more volatility, and that supports the use of alternative investments, especially as the year goes on. And in fact, here we sit in February of 2020, and we've already seen a 600-point drop in one day as a result of the coronavirus and fears that surround the coronavirus. Of course, again, we don't think that it's necessarily the coronavirus itself that causes this downturn. It is news that triggers trading activity that generates algorithmic computer-generated trading, and we get exaggerated bouts of volatility. But as we go into a year where we think there's going to be a lot of news flow, we think that volatility increases. A good year to really focus on alternative investments.